As a retail trader, that's the fun part. Sometimes we get to buy high if we think it's going to keep going higher, but you need to be aware, well, when is high, now low, right? And that's really tricky, right? Because once we buy through premium, old premium becomes new discount. Once you get used to how that works, you can really get some very large moves out of the market.
Welcome, I'm coming to you for a new trader interview. We have these every single week on YouTube and on the podcast as well. These are a good chance to sit down with some traders around the world, ask them questions, see their perspectives, see their background. And today we have a very interesting one, which is a trader who is fairly new to the game. If you compare him to guys who've been trading for multiple decades, he's in the same team as Andrew is, who he had on the podcast before. Andrew is an amazing trader, cool guy, day trader, kind of very high energy. It's good to get a different perspective on traders who are around him and how they trade and sometimes do things a bit differently. There's a lot of good advice in this one about the journey of a trader, what it takes to become successful, what things are necessary to maintain success. We talk about the psychology of trading and a couple more things, so make sure you stick till the end. This is the interview with Thor Young, and we'll dive right into it. So Thor, welcome on the podcast. Good to be here. Look forward to discuss with you about trading.
Oh man, thank you so much for having me on here. I really appreciate the invite. Big footsteps to follow coming in after the Dr. Andrew Aziz, but it's it's always it's a fun time to come in and talk trading. We're all doing it at different levels, so it's always fun to chat about it.
So tell me a bit more about kind of what you do these days.
So I'm a moderator at Bearable Traders. Principally, I've been that for about 5 years now. And so I actually started trading in Bearable Traders and actually learned, so Andrew's book, How to Day Trade for a Living, that, is basically like the book everybody knows at this point, right? Is the one that kind of got me into the community. And then I, kind of found my own trading identity, I guess I could say within that. I actually don't trade anything like Andrew. So almost a polar opposite at this point, actually, which is kind of funny. But there's a spot in the community and it's a really diverse community. So there's not really an expectation that everyone trades exactly the same way, which is nice.
Tell me about what got you into trading in the first place. Like what got you interested about trading in the very first place?
So I originally was in like the IT sector. So did a lot of stuff, but it was just an insanely demanding job. And a very thankless job, actually, on top of it. So it was just insanely long hours and not really getting anywhere, but it was good money. And then my daughter actually was diagnosed with autism. So she's nonverbal, so she has really severe autism. So I just needed to free up my schedule a little bit, and I needed something different. So I switched from IT and was kind of looking for something I could do. And then actually just kind of one of those random on the radio, try day trading kind of a thing. And I was like, And then I got out there and went on and looked for, resources. And sure enough, book that pops up is, that guy. So I started trying it. It was a significantly more difficult journey than I expected it to be. That's for sure. But now that I'm pretty far along, it was worth it.
Give me the timeline on when you started trading and when you started to get results from trading.
So I started trading in 2017. So leading into the current U.S. administration, because remember there was a gap. The current administration was the prior administration. So funny enough, I'm actually used to this kind of market, I guess, because I learned to trade in it. Which is a wild time, I guess you could say. But as I got into it, in the beginning, I struggled pretty hard. I had this really I think everybody has this instantaneous success when you try it. It just seems like it works really easy. But then as soon as you really start to say, okay, I'm committing to this, I want to do it, the nature of it just kind of changes. And all of a sudden, all of these flaws start to get exposed and you start to realize how hard it is to become an actual trader. So it probably took me 2.5 years of really grinding to get to a point where I would consider I had stopped the bleeding, if that makes sense. You know what I mean? Like it wasn't like I was making a lot of money, but I was not losing money. And, I was generally making more money than I was losing. And then it was probably another year or two after that I actually found that I started getting into a decent growth curve. But I've been growing exponentially each year as I've hit that curve, which is really interesting. Like I do better now today than maybe my first 5 years of trading combined. I've probably done in like the last few months, right? So it's like, so once you kind of get into it, like Andrew, I've actually heard say this: if you can learn to make $5 consistently, I can learn how to make $50 and learn how to make 500 and then 5,000. So it's like, it's really kind of interesting, but that is true. But the performance is very difficult, like as you step up through the risk, not just screwing it all up.
Walk me through some of the lessons that you got along the way that really made a big difference for your results in trading. Were like a few key takeaways you got over the years, or things you can spot that made a big difference?
So one of the big things that's really been a huge focus of mine lately that has really extended my profit taking is actually focusing more on the psychology of trading. In Bearable Traders, we have Dr. Vanessa Charlin, Dr. V, as we call her there. And actually, I worked with her specifically on being able to, I used to I trade futures primarily. So I used to, as those of you who are in futures, there's like micro futures, and then there's the minis, like which are more the full size future. And transitioning from the smaller to the larger took a lot of effort for me for some reason to get past that, I guess, that hump of not being able to risk more to make more. So by focusing in on psychology, I actually realized like I had a lot of kind of just performance hook hangups that were getting me there. So now as I execute, I really don't even consider how much money is in play. I really don't really consider anything other than the exact process that I've lined out exactly the way it needs to be lined up. We call it like our recipe. Like I have a formula basically for how I take trades. I do it exactly that way every day. And then I adjudicate it in the evenings after I'm done. And it took a lot of the anxiety out, and that's what let me get there. So I would say the big takeaway is don't wait till like tomorrow to start focusing on your mentality. That will actually be the difference between making kind of a little money and making a lot of money. It won't be your technique. Everyone figures that out really fast. It's the psychology that's really, really hard to get a grab on.
If you are enjoying this interview so far, then I think you'll like this one over here. I've been working on this book for a long time called Prop Trading Secrets. It's finally out. You can get it in your favorite bookstore or on Amazon, Barnes & Nobles, of course. And this book is really about interviewing traders who are successful in either trading for prop firms or managing their own private fund. We talk about their background, what makes them successful, the things they went through, struggles they had to go through to become good traders now, and a lot of the good wisdom that you might not necessarily hear about, but it's all into a condensed version over here. You can read through these stories, get inspired, of course, learn a lot about what they do, their strategy as well. And we summarize everything at the end where you have a whole chapter of summaries of what these traders have in common. So if you want to check it out, 14 traders in this book that myself and Kathy Lean interviewed. There's a lot of good wisdom in this. If you like these interviews on YouTube, I'm sure you like this one for sure. Go grab it. Like I said, it's on Amazon, Barnes & Noble, it's on Audible in audio version. All the other audiobook platforms will have it too, or your favorite bookstore. So check it out. If you did read it, let me know in the comment section below which one is your favorite chapter, and we'll get back to the interview. How did you improve your psychology? Was it through books or through mentors or videos, or what really helped you to get there?
I think all of the above. I think it's trading will expose all of your worst flaws. Trading, yeah, right. Trading is, we naturally kind of are just bad at it. It's the way trading makes us feel, and the way trading kind of, the way it just always seems to go a little too far. You really have to develop really strong ability to lose. In trading, you will go through years of suffering trying. This is a Dr. V quote, actually. You'll go through years of suffering as a trader. And even when you are a trader, there's still a pretty strong element of suffering in it generically every day. Because you're gonna have to. A really good book that I recommend is by Tom Hogard. It's called Best Loser Wins. And it, you really got to think about it as you are going to lose in trading all the time. So if you do not deal with that constant getting hit over and over and over again and allow that to dethrone you psychologically, you're never going to make it as a trader. And so that's where most traders fail. They actually get really good at reading charts. They're good at technique, but inevitably they push the button at the wrong time, either for getting into a trade or for taking profit. because their psychology just doesn't let them. They already know what the plan was. They just didn't stick to it.
You mentioned your trading style is different from Andreas's these days. Walk me through kind of what you look at and what's your typical trading style.
So Andrew, most of you who have, followed him will know he's a momentum trader. So he's really famous for playing like the 1 and the 5 minute ORBs. He takes very large share volume, makes very big profit, and can do it in a relatively small time frame. I am more of what you would consider to be a traditional day trader. Think more swing trader, right? But I don't go after hours. I'm looking to take advantage of if Tesla's ATR, or which is our average true range, is $10 that day, I'm looking to get $8, right? I want to get the vast, but what this allows me to do is risk less, take lower share volume, and then I hold for very long holds across the ranges. So I don't partial, which for those of you who are a little unfamiliar is taking profit at smaller intervals to like lock in the profit, right? I just hold for profit targets, and it's a lot less anxiety driving for me. The way I get into this is a Camarilla-based pivot system that I've designed. I actually wrote a book on it, and it's a very specific way for interacting with the market based upon some knowledge that I have of how a lot of the market makers, quants, and algos are actually interacting with the market. So I've been very lucky to get to spend quite a bit of time on the NYSE floor. And I've got a couple of nice connections in there. So it's been really good to get to chat with them and learn kind of how the behind the scenes works. So my trading system kind of takes a little advantage of that knowledge, maybe a lot.
How long is your typical holding for? Is it like a few days or a few hours or?
I'm only a day trader, so I'll never turn it into a swing. Full disclosure, I got a little bit of that ADHD thing, and man, night, I just never found I could go to sleep while I had positions. I just wake up in the middle of the night 3 times, and I actually realized, unless you're trading like a commodity or something like that, I like commodities futures are really great, like gold or something like that, or silver, orange juice, soybeans, all those actually move great after hours. But everything that's related to the market, I prefer to play those, when the market's open, because that's when the best volatility, you got to worry about spreads and all those kind of things. That's all a lot easier when the market's open.
I'm curious how you learned about these pivot points and how you like what you like about them.
So I got really lucky. This is an interesting COVID story. I got really lucky. Andrew got invited to go to the NYSE, and I was on staff at BBT, so I got the tag along. But when we got there, unfortunately, the U.S. had closed its borders, so Andrew ended up not being able to get in. All 2 of the other guys from the U.S. that were going to be there both got COVID, so I was the only one who made it, and the only one who had not gotten sick in the process of making it. And this was to hang out with. Most of you will know who Peter Tuchman is. He's the Einstein of Wall Street, one of the most photographed market makers of all time, if not the most well-known market maker of all time. And we were going to be hanging out with him. So that small tag along ended up turning into a multi-day hangout at the NYSE, just getting to know everybody and do all this cool stuff. And that's turned in, I've probably been there, I don't know, half a dozen times now, maybe more. And have made some pretty close friends there, and it's a lot of fun. So now, getting to explore the lore. So as I talked to these guys and got to know, what I started to realize is these quants and these algos really drive the market. And there's a Canadian economics student. His name was MB Mitchell. He actually developed this Camarilla equation back in the 90s when he was studying S&P futures. And that algorithm was worked into many of the quants that you're seeing used out there today. So you will see, if you follow my media, I'll throw that out to you at the end of this thing. If you follow my media, whatever, if you go on my IG, you'll see I have almost every single day, every other day, these trades posted where I'm just hitting right at the top, grabbing right at the bottom. And you'll sit there and go, how is that dark magic possible? And the reality is we actually traded in a highly, let's not use the word manipulated. Maybe we could go with the word highly massaged, stock trading environment. Obviously, there's not total control, but they do what they do. So when you start to really kind of recognize what these patterns are and what they do, and then in an interesting way, almost just have faith and submit to that the market is going to do these things, that's when these great opportunities really come up.
Do you find them more reliable than other kind of pivots, or have you kind of jumped into these other things, or is it just the one you kind of stuck with from the beginning?
I find them significantly more reliable than most other pivots. So, depending on the platform that you use, I have a version of them on almost every platform. So, if you use like Thinkorswim, if you use TradingView, if you use DOS or DAS, sorry, I always say that wrong. If you use DAS, we actually have a version of my pivot system is going to be released on that really soon. We've been working on that. So basically, like on my trading system, I've actually got the entire pivot system coded in to these platforms like TradingView. So while I'm walking around in the middle of the day, my watch will literally go bling, and I'll look down and it'll say alert, short opportunity on Microsoft or whatever, and then I'll say okay, and I can pull up my iPad, log in, see it, put in my risk metrics, hit the button, and boom, I'm short. Right. So, and we use some visual components we have Market Atlas, which is like a visual order book through Variable Traders trading terminal. And so we can use that to look at the visual order book to see if it looks like it's going to, if we're looking bearish, like we're going to go down, or if we're looking like we're very incentivized to go up, if all those things line up, then we're in. So it really speeds up the whole trading concept, because really my main goal, especially with the people I'm working with, is to provide an environment in which they don't have to live trading, right? It's like you just sit down, you get your trades in, and then you get to go off and do whatever you are really, trading should be freedom, not like anchoring you to a desk for 8 hours a day, ideally.
Definitely. You probably being a monitor, you see guys who are struggling with consistency. They want to get some results and more consistency in the trading. What do you think is the few common issues that people have that prevents them from getting there?
The main issue with getting consistency, in my humble opinion, is that people are unwilling to hold themselves accountable the same way they would, let's say, a subordinate. So, like, one of the things we like to do as an exercise is pretend that you are not you. Pretend you are somebody you just hired to trade for you. You write out your trading plan, your like a standard operating procedure, give it to you, and you should execute that flawlessly every time. After you're done trading for the day, hand it off to other you, and you can sit there and look at it. And this is really just to maintain consciousness versus awareness. When we trade, we get hyper aware. So we make lots of weird decisions that we never really planned on. So this is trying to lock that in. So it's, you'll constantly say, man, I had the great idea. If I hadn't gotten in 5 minutes early, if I had gotten in then instead of waiting 5 minutes late, like I knew it was then. Well, why didn't you do anything about it? Right? You had a plan, what was the difference? So if you can just, how do you say, like, just don't be concerned with the outcome, just focus on executing that plan, then you can objectively see what the result was. All of the variables you inject otherwise, especially during the learning process, they're just branches you end up having to chase. So the more you can just stay firm, okay, this is what I want to do. Simple, 4 or 5 key things. Here's a level. Here's what makes me want to get in. This is how I manage my risk, right? And if it works, do it again, right? If it works again, do it again. Like, don't change anything. I mean, sometimes you'll stumble into a system and it'll be working, and then you change it too, just because of performance. So that's the main thing. Just try and objectively trade every day almost as if you're not the one trading. Like, it needs to be completely, almost like an algo. Like,
When did you start to work on your own approach and your own kind of way of trading? Because I feel like a lot of people get stuck in kind of learning from a mentor, and it's very good for sure. Like it definitely helps a lot. But when did you start to kind of create your own path, your own strategy or method in trading?
so I actually remember exactly the day that this happened, which is a sad, sad day. I'm gonna smile even though it was a sad, sad day. I'm not gonna. So I remember being a little frustrated at my results, maybe a lot frustrated. And I went into this trading day and I said, today, every time I take a trade or I think it's going to be a long, I'm going to go short. Every time, like literally, I'm just going to do the opposite all day. And it was one of the best days trading I had had in a long time. And I was like, dang it, like I'm broken, like something's wrong. Whatever I've learned it, and I've learned it exactly backwards. Right. So that's when I was like, okay, I got to switch something up here. So, and then that's when I started kind of exploring around, looking for what really made sense to me. And what I realized is I wasn't very good at reading smaller price action, like up, down, up. Like I wasn't like, I was really getting tripped up a lot trying to really get small trades to make good money. I realized once I kind of relaxed a little bit, started using wider stops and going for bigger targets, it actually became a lot less stressful. And I started hitting a lot more trades, which was kind of the opposite of what I think I thought was going to happen when I came into this.
It's interesting. What makes you want to go for bigger targets as opposed to smaller one? I feel like people would prefer to have smaller targets with maybe more that are more easily achievable, kind of maybe a higher win rate. You prefer these bigger targets. So why do you think that is?
So I've had the privilege of working with, like personally, with well over 100 traders now, like mentoring them and helping them with their trading. I can tell you, out of all of them, not one of them made it to successful trading, high frequency trading. Where you're just going for scalps or small targets and you're just hitting over and over again, because you're going to have to be an insanely good stock trader to pull that off. Now, I'm not saying there aren't stock traders that aren't pulling it off. I'm just saying you have to be a better than me stock trader to pull it off, because I couldn't pull it off. That's one of the things that was really so for me. I would rather have a high reward rate than a high hit rate. So if you, for instance, let's say you take 10 trades and you're risking 2R per trade, and let's say you run an 80% hit rate at 2R. 80% hit rate at 2R is only going to be about 16R minus 2, 14R a day, right? So let's say you go for 3R, but you have a 70% hit rate at 3R. Well, now you're talking about 21 minus 3, right, which is 19. Right. So now you're making more R, right? But you have a smaller hit rate. Well, let's go to 4R at 60%. Right. Now you're talking about 20 Rs, right? But you're able to lose 4 trades out of every 10 instead of only 2 trades out of every 10. This is how you significantly lower your stress in trading, right? Because what you'll start to realize, like on our YouTube channel at Variable Traders, it was probably around 11:15. I had a call on Mara yesterday. My pivot system called it out. We looked at it. We took it looked good. It looked like it could sell. We went ahead and went short on it. That ended up being an 8R trade, right? I did not partial it once. Right? I did not have to hold. I only held about half the ATR. I was still able to get about 8R on it. That one trade offsets 8 losing trades, right? I could lose 8 trades now and I would still just be break even. But if you're high frequency trading, every trade you take only accounts for 1 loser. At most, breaks you even at 2. Right. So you have to be really, really good and run a really, really high hit rate. I can run as low as a 40 or even 30% hit rate at times and still pay the bills. Right. And when the market goes good and I get up to that 70% hit rate, well, that's like trading nirvana, right? It's just like life is good this day. Things are just pouring, but it's good. It works a lot better. And I think you're a lot less susceptible to sudden market condition changes. If you're a scalper and the market goes bad for a few days, you're going to lose a lot of money in a couple of days.
For you to get the 8R target, do you feel like you have to be better at kind of getting the entry right? Like someone who trades a very kind of small target would be kind of more prone to hitting it without kind of thinking about what he's doing anyway.
Yeah. The real important thing is actually the awareness of value and range. If you're, you need to be aware of where we're most likely to find sellers so that you can, we're looking at institutional orders, right? Like where our institutions are selling and where they're buying, and we're going to sell where they sell and we're going to buy where they sell. But these are very large movements between these large orders. And this is really what the market was designed for, was just to ferry these big orders back and forth between each other, right? So we're trying to catch as much of that movement, but you need to know how to identify where, basically, if you're looking at your previous day, your high of day is going to be premium on that day. The low is going to be discount. Somewhere in the middle is your value, right? And it oscillates a little up and down. So if you're going to sell, you want to sell near the previous day's high, right? That's where we sold before. But if we buy through the previous day, we could break out and go into some kind of long. So maybe you're buying as a retail trader. That's the fun part. Sometimes we get to buy high if we think it's going to keep going higher, but you need to be aware, well, when is high now low, right? And that's really tricky, right? Because once we buy through premium, old premium becomes new discount. And once you get used to how that works, you can really get some very large moves out of the market. We use factors like ATR, average true range, and we calculate our average distance these tickers move on a day. And we're going to try and get, like I said earlier, 3/4 of that move if we can have it. I want to get as much of that move as we possibly can, because then we can take as few shares as possible. And then all you got to do is just not touch the keyboard. That's the hard part. You just got to get your hands off and let it roll.
How do you do that? How do you stay off the keyboard? Do you tend to walk away and that's it? Or is there something else you think of?
So I'm blessed in the fact that I have many people to work with and talk about trading. And I've been doing this for long enough now that I just kind of have the composure just to let it go and just focus on other things. In the beginning, absolutely getting up and walking away from my keyboard. I always go, Dr. V and I do a lot of collaborations in our group mentoring stuff. And so I often kind of go to some of her references because they're just easy to really kind of understand. And she talks about, like, if you're baking a cake, right? If you keep looking at the cake and opening the door and looking in there, you're going to get a really weird, inconsistent cake. Like, once it's in there, it's better just to let it bake. So, and that's how I feel with positions. Like, because I'm a range trader, so I use bracket orders. As soon as I'm in, my stop orders put on, my target orders put on. So there's really no reason for me to participate with this ticker. So I'll set an alert on my stop, right, and then walk away, right, and then if my stop gets hit, my phone will pink, and I'll look down and stop trigger, and I'll be like, all right, guess I'm out. And I only take 1 or 2 trades a day at most. So if assuming there's a good setup that day, so it's like if that hits, it's like, all right, done for the day. Let's go do whatever, get the oil changed on the car, or whatever we're going to do. Let's, hang out with the kiddos, whatever we got.
I'll give you time to tell people about your book and where they can find you after this podcast. So where can they connect with you and learn more about your work and what you do at Variable Traders?
Man, I appreciate it, man. So a lot of the people that you do learn from, one of the differences is not a lot of them have been using the same trading system for a long time. So I do have a complete day trading system, which is my book that I wrote, and I actually published it in 2022. So, so I was detailing it for a couple of years before that and actively using it for a year or so before that. So, it's something that has been through multiple market cycles, and it performs very well based upon these. So I'm really, really happy to continue to bring that out to the trading community. Lots of positive reviews on Amazon, and that's the easiest place to pick it up. Just grab it on Amazon. And yeah, so as far as finding me in media, if you want to find me on Instagram, I'm Thor Young BBT. And if you want to find me on X, Thor Young. So I've had that one for such a long time, it's just me. So so that one works out. But yeah, that's that. And then of course I'm a moderator at variabletraders.com. I'm also the lead futures trader for Peak Capital, which is a proprietary trading firm. And then I do my own private mentoring. So, and all the links to that are all on my IG. So not gonna worry about that.
Yeah, I'll put a link below for that as well. People can check it out. And I appreciate your time here, Thor, and the advice you give to listeners. I think it's good stuff. Hopefully they can take away some of this, and look forward to discussing with you next time for sure.
Absolutely, man. I appreciate you. And again, thank you for inviting me on, and thank you for, to all your community out there. If y'all need anything, don't, feel free to reach out.